Soft US inflation data sees markets price in 2 Fed rate cuts later this year. Gold rises and the US dollar falls as markets turn from trade talks. Subdued retail demand continues in New Zealand, and India's inflation is weaker than expected in May. That's coming up in our 5 Things in 5 Minutes on Friday, June the 13th. And then in our deep dive interview, ANZ senior economist Matthew Galt discusses what's driven New Zealand's economy out of last year's recession ahead of Q1 GDP data next week.
We're expecting growth across manufacturing, most services industries and agriculture. Where we're expecting a bit of a drop in GDP is public administration from ongoing fiscal consolidation there.
But first, in 5 and 5 with ANZ, I'm Alex Tarrant in for Bernard Hickey. Markets are now fully pricing a 25 basis point rate cut by the US Fed in September and another in December, following further signs that tariffs aren't feeding through to US prices. Producer price inflation was just 0.1% in the month of May, following soft CPI data yesterday. Here's ANZ economist Bansi Madhavani.
There is no evident sign of tariff-led inflation pressure building up even at the wholesale level. The Fed on their part will be encouraged by how data have evolved so far, but they will note that patience is warranted given that there is no clarity on the trade policy and what its effects on inflation could be. So at its meeting next week, we expect that the FOMC will note that continued disinflation so far is positive, but will maintain that they need to see more data before they can resume cutting rates.
At 4 a.m. Sydney-Melbourne time, the S&P 500 was up 0.3%. The 10-year US Treasury yield was down another 5 basis points at 4.36%. There was also a strong sale of US 30-year Treasuries overnight. Gold was up 1.8% at $3,403 an ounce, while West Texas Intermediate futures were up 0.23% at $68.31 a barrel. The US dollar index was down 0.7%. The Aussie dollar was up 0.37% this morning at 65.28 US cents, and the Kiwi was up 0.53% at 60.63 US cents. Number 2. As mentioned, gold was up overnight following that US inflation data. ANZ commodity strategist Sunny Kumari says the key driver for gold is now shifting to macro developments, away from incremental news on trade talks between the US and China.
If details are not as conducive as market expects, there could be some renewed volatility in gold prices. That said, we think that market is gradually getting less reactive to trade-related developments, and the focus will gradually shift to implications of US trade tariffs on economic growth and inflation. So in our view, macroeconomic factors will take over as the primary catalyst for gold prices. And we expect a consolidation in the short term, which will prepare the ground for the next rally towards 3,600 by the year end.
Number 3. The US dollar fall overnight is within the context of downside risk increasing for the world's reserve currency. Here's ANZ Head of FX Research, Marjabeen Zaman.
We have reports around Israel and Iran tensions picking up, which has driven safe haven flows to the euro, with the euro touching fresh highs yesterday. I think we need to take a step back and look at the changing roles of the US dollar and the euro. The US dollar has now effectively swapped roles with the euro, and euro is now attracting safe haven flows, while the US dollar is moving with risk appetite like a risk or a cyclical currency. This is really a function of the current trade uncertainty that we're seeing, and also the loss in confidence in the US.
Number 4. In New Zealand, electronic card spending rose slightly in May from April, although spending in retail industries fell 0.2%. ANZ senior economist Matthew Galt says flatness in recent months indicates still soft domestic demand.
We have seen the broader household sector still fairly soft in New Zealand over the last few quarters, with retail spending relatively soft and a soft labour market. So as part of the broader story of the New Zealand economy only gradually recovering from the downturn over the last few years, we'd expect consumption and card spending to gradually increase from here as the economic recovery gathers some more momentum.
Number 5. India's annual inflation was 2.8% in May, below market expectations for 3%. ANZ economist Dheeraj Nim says the reading comes after the Reserve Bank of India established a neutral stance on monetary policy.
The Reserve Bank of India's neutral stance means that the bar for any further rate cut is quite high, and quite frankly on growth, not so much on inflation. And that is where we think that growth can surprise the Reserve Bank of India on the downside, because high-frequency data are not pointing to any particular direction or improvement, at least from a trend perspective. So we have still retained a 25 basis point rate cut in the October meeting, contingent on growth conditions.
Dheeraj Nim there. Now in our deep dive interview, ANZ senior economist Matthew Galt previews New Zealand's Q1 GDP data due next week, following stronger than expected partial indicators.
We're expecting 0.7% quarterly growth in production GDP for the March quarter, and that would match the 0.7% growth we had last quarter, and well up from the sharp downturn we had in the 2 quarters before that, dropping about 1% each quarter. We had a preliminary forecast of 0.6%. We've bumped that up to 0.7%. The reason we've bumped that up is because we saw the partial indicators for GDP released by Stats NZ over the last few weeks were a little stronger than what we'd expected. We had decent growth in retail trade, manufacturing and wholesale trade, and construction activity has broadly stabilised after 6 quarters of decline in a row. So all of those were a bit stronger than us and the market had been expecting.
And so will those sectors be what's driving GDP this quarter? Are there other sectors that will be driving it? And I guess on the flip side, is anything holding it back?
We're expecting reasonably broad-based growth across industries. So those sectors, such as retail trade, often provide a signal for quite widely across the economy rather than just for that specific sector, given it feeds into a wide number of other industries. So yeah, we're expecting growth across manufacturing, most services industries, and agriculture. Where we're expecting a bit of a drop in GDP is public administration, so from ongoing fiscal consolidation there. Construction, still a little bit of a drop as that sector recovers from quite a deep downturn, and a couple of smaller sectors, mining and electricity.
Now, in New Zealand, there's always a lot of focus on per capita growth and also those productivity metrics. So how do you expect those to look in the Q1 data? Are there any sort of green shoots there?
Yeah, we are expecting per capita GDP and GDP per hour worked, so productivity, to lift both well down from their peaks a couple of years ago when the economy was overheated, and they're only up around 2% from 2019, which is a very slow rate of growth. So that's the good news. We're not necessarily expecting this to be the start of a surge in productivity in New Zealand. More it's a sign that GDP's dropped more than employment as firms have hoarded labour or held on to labour through the downturn rather than risking losing those key skills. So we just expect productivity and per capita GDP to have a bit of a lift on the back of GDP recovering faster than the labour market.
Now, if growth does come in at 0.7%, that would be above the RBNZ's latest forecast. So what could that mean for monetary policy if we do see that reasonably stronger quarter of growth?
Well, the Reserve Bank have said that they're in data-dependent mode, so they're watching very keenly what data is coming in and using that to form their views rather than having a clear easing bias, although they did signal in their last MPS that their OCR rate track was dropping around 40 basis points from where it is over time. So if there is an upside surprise to GDP, that would be taken by the market as reducing the chances of a cut in July. But the details will matter a lot, whether that's volatility in a particular sector or whether it represents broad-based economic momentum. So we'll be looking closely at that. And there's a lot of other key data to come out before the Reserve Bank's next decision, including the selected price indicators, housing market data, and various consumer and business confidence measures from ANZ and the NZIER QSBO. It'll be interesting to see how things play out.
Matthew Galt there. I'm Alex Tarrenton for Bernard Hickey. That was 5 and 5 with ANZ for Friday, June the 13th. Catch you next week with a look ahead to Australian jobs data and rate decisions in Japan, the UK, and by the US Fed.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.